right, while we're waiting, thanks everyone for joining today. My name is Nick. I'm one of the grid leaders. Just waiting for Carlos to log on here. What we're going to dive into is, we have a guest today, Bruno, and we're going to talk about a little bit about the market data. So the market report just came out for September last month, and we were pretty shocked. I'm going to share it on my screen now. Let's see. There we go. So we're just trying to evaluate the market as real estate investors, right? Trying to get in the market when it maybe is a little cooler, where to jump in. And right now we feel as a team that does 200 transactions and actively talking to a lot of real estate agents and doing the weekly masterminds, we feel that and the data, now we're trying to comprehend the data and come up with a theory, but basically we're not in 2020 where the pandemic really was able to lift prices at a substantial level, and where inventory was at a lower level. We're still at, as you could see, closed sales in September was down from last month and also down from 2020, 10%. So there's less sales this year than last year. But median sales price is still going up. So even though inventory is, or there's less homes being sold, they are being sold for more. And we're kind of feeling like the spring market was a true spring market and ended in June, July, where last year it was pushed back 2 months and really continued in August in 2020. Last year, September was just bonkers, right? Now people are pricing, in our eyes, at the top of the market where, you're pricing based on your ahead of the market, but really you shouldn't, because maybe people aren't there yet. Buyers are experience a little buyer fatigue. So if you're trying to sell a house, or even look to buy a house, you're seeing that it's taking a little longer to sell. And not only that, it's dropping in price. I didn't know anybody wanted to comment on the market and this data, maybe quick a sentence or two.
I'm curious whether people understand the ups and downs that have been happening. Some people are under the impression it's been nothing but up. Some people have a very pessimistic view because the market has shifted very recently, and then their heads are in that. Anybody here want to volunteer what their impression was of the market before we started this meeting? Did you guys think it was up? It was down?
Do the thumbs up, thumbs down. Yeah.
Or anything specific anyone can comment about what your impression of the market was.
So yes, this is Joe here. This is like the normal, because like now we're entering the fall market. We left like that spring hype and all that stuff. It's becoming more like normal, right? So I think before COVID, this was normal, correct? Like, would you see that? But with COVID, it kind of skewed things up. Like Nick said, it pushed that spring market more into the fall. But this is like more normal. It's not like a down market. It's more like this is how it usually is. I think that's what I'm seeing here.
I think that's great.
Yeah,
I think that's great. I think one of the reasons that for some of us who sell real estate, it feels somewhat negative is because it was such a letdown from this out of control, aberrational spring that we had. Late fall last year and spring of this year that were just like, like otherworldly. Like that's not normal. So then when you get back to normal, normal feels like such a big letdown. Yeah, I 100% feel that. 100% feel that. And, median pricing has been continuously on the move all of last year and this year. Although it probably will be the case that wherever anyone here lives in your neighborhood, somebody got way lucky this spring, and all the neighbors are trying to match that sale, and it ain't going to happen this fall. So think of it like this. Within a year, we have a high, and it happened early in the year. So maybe from the beginning of the year to the end of the year, it looks like a decline. But what we normally do is we compare one year to another. So when you blend those really ridiculously high sales of the spring and the sort of more normal sales that are happening now in the fall, that blends to like this, and that's still going to be higher than last year when you compare year to a year. But it's just that within a year we're seeing, all of this, all these changes. So one of the things that Nick loves to talk about, that the Bright MLS has come out with recently, is this demand index. You guys been hearing about that? So for years we've talked a lot about supply because it's so low in DC. Around the country now with COVID, they're talking about the lack of supply. And we have a report to share at the end of this meeting that we would like you to stick around for, where Goldman Sachs talks about their really radical predictions for how real estate is going to go up a lot more. And they're very focused on the lack of supply, and that's their reason around the country, the lack of supply. But around DC, Maryland, Virginia, we've been dealing with a lack of supply forever. That is our normal. That is our normal. And now recently, we're very accustomed locally to talking about the lack of supply, because it would be like if in the desert you talked about the hot, dry weather, like it's every day. That's just what we live with here, a lack of supply. And now, thankfully, I'm very grateful that the local MLS has this demand index, because we talk about supply and demand. Now we're looking at the demand side of it. And what's really happened is during COVID, we had redonkulous demand at the beginning or the end of last year, the beginning of this year. And now the demand is like what they call moderate. So locally, we have moderate, whereas we used to have, say in the spring, high demand. Demand is now down to moderate. Both of those levels of demand, high before and now moderate, against really low inventory. So that's one thing that's going to keep pricing from dropping, right? Even if demand went from moderate to, I don't know what's below moderate on that index, probably, low or something like that, or low moderate or something like that. That level of demand would still be against just really, really low supply. So.
Hey, Carlos, it's Jason Piccolo. I
Hey,
gotta say though, the condo market sucks. High-rise condos are the worst. They're not selling at all. At least in Arlington, they don't sell at all unless you drop the price, 10% or more.
Yeah,
What price? What price? Just curious.
What's that?
Is there a specific price that was it ever doing well, or is it just doing worse?
I think over the past, ever since COVID, like March 2020, demand for condos, at least high-rise condos, has just plummeted. At least in Arlington that I've seen. Maybe not as much, maybe a little bit in DC, but I would say more so in Arlington. We're taking, in the Clarendon area, bigger price cuts for sure.
Yeah, there was an article in the New York Times this Sunday in the business section that said, speaking of New York real estate, that you can't call an apartment a luxury apartment if it doesn't have outdoor space, because outdoor space is what the luxury buyer wants now. So don't go calling that penthouse or that fancy apartment luxury if you don't have a patio or a deck. And I think that issue of outdoor space and the desire for elbow room is definitely making the apartment market a little rough. I grew up in New York City, and sensing that things were low, our family, we acquired an apartment in New York this year, trying to buy low. And, there's been some measure of recovery there, but I don't think it's fully recovered. And I think here, it's also easier for a person to say, like, I don't have to live in an apartment. Whereas there are large chunks of New York where, that's all we got for you. And so maybe accepting the idea of less space is just even a little harder here, even though we're actually less dense than New York, interestingly. Because I know, Jason, you're speaking of Arlington, but I can tell you, DC, it ain't easy to sell a condo either. And even with outdoor space, sometimes it's not a picnic.
Yeah, that is a segment. If we look at it as a segment, yes. And I'm sure you could break it down, house during the pandemic versus condo during a pandemic, and how well they performed.
And also large buildings versus small. I feel like the boutique apartments are much more desirable during COVID. I feel like the large buildings with the large, the elevators and the the constant interaction with neighbors. You live in a boutique building, you might not see anybody on certain days coming in and out. I think that's a big variable for me. I have been noticing that the apartments we're selling in smaller buildings are moving, whereas in some of the towers, it's just getting a little rough, unless you have really, really great outdoor space.
And I know our guest Bruno has some on the market right now that are 1-bedrooms. And what I'm seeing is people in DC, instead of buying a $350,000 condo with $200 fees, they're now getting a $400,000 house somewhere else. So
yeah, we've seen some of that too. We've seen some of that, but like Carlos said, all the units that have outdoor space, we sold them pretty fast. Price points, 700.
That's right.
750,000. Let's say between six and 750 for the various locations. We have right now a building in Brooklyn and one in 14th Street.
Yeah, the other thing I've started to notice, in particular, working on this apartment search with Nick that we've been doing for a government appointee from the West Coast, is that when she asks me, do you think this will appreciate? It feels like the apartments in neighborhoods that really young people like feel like they're more likely going to appreciate. Like, interestingly, when I get down to just asking my gut, hey gut, what do you think's going to happen next? In like DuPont or Penn Quarter, two neighborhoods where older people like me are very happy. I'm like, yeah, but if I bought something there, I don't know that it would go up much. Whereas if you buy something in like Shaw or Brookland, you get the feeling that there's movement there. Adams Morgan, where, places where I think the younger demographic is pushing. So what I've been hearing myself say lately to clients is the young people are moving the value in terms of forward-looking appreciation downtown. I don't know if that resonates for you, Nick. And maybe, Jason, maybe like Arlington.
I completely agree. I agree with one portion that the energy in some of these Brookland, where Bruno's developing, are hot, and you feel some movement there.
Yeah.
And that the bigger buildings, that are downtown, are not moving as much, but might be an opportunity, because who knows what's going to happen in 4 years. And that place you saw for $875 might be worth $1 million quickly in 2 years and appreciate $200,000. I don't know.
I mean, as a New Yorker who grew up, amid such expensive real estate that's so teeny tiny and so costly, I'm amazed that you can still buy, say, 1,000 square feet in Penn Quarter for $650, $6 even. That blows my mind that it's not more expensive. You're in the middle of everything you might need. So what else did you want to pick out from this report, Nick, that you really, because this is almost too rich. If anybody wants some of the market data that we are sharing, please just hit us with an email after this meeting, and we'll follow up to share it with you.
I actually like the highlights. Close levels for the week pace below 2020. but saw gains compared to 2019. I think that's a good summary of this month, actually not this week. Below 2020, but higher than 2019. That's the story I've been telling. We're back to 2019 levels, I've been saying, but realistically, we're still above there because of rates. But that's just the way it feels, the energy in the market. The second thing is the average pending sales per week over the last declined. Pending, meaning people coming out, spending money. So week over week, it's been declining.
Can you take us to the sheet that shows the median sales price through the first 9 months of the year?
Oh, okay. I had that
I think
one.
that's the other report, right?
Let me pull it
I think
up.
that's the full report.
Yep.
There I got it.
I did want to just, I did want to just point something out, which is that through the year, through the first,
I mean, it has data upon data, so you got to really be careful. And you're talking about what?
median sales price. There we go. So if you look at the bottom right-hand number of 8.4%, that is blending all of these areas into a single number by which the median sales price has gone up. It's 8.4% in comparison to comparing the first 9 months of 2021 to the first 9 months of 2020. So we got 3 quarters closed, and through 3 quarters of 2021, compared to the first 3 quarters of 2020, we're up 8.4%. Obviously, we're up more in certain areas than others. Interestingly, Jason, Arlington's down, which is like, I don't get that. Knowing what I know about Arlington and all of its attributes, I'm actually shocked to see that number. And I think that includes houses and condos, by the way.
Weird.
Yeah, very weird. That's an awesome close-in suburb with lots of positive attributes. And then you can see that you get into some of those Maryland counties and Fairfax as well, and it's really humming. I guess Fairfax County is just 7. City of Fairfax is small. But Montgomery and Prince George's counties, those are some big counties, clicking at 10%. Anybody have any questions about this data? All right, well, we just thought we'd start with the data, especially since we got going a little late, and now we'd like just to briefly introduce Grid. We do have some people I can see who are here for the first time or one of their first times. There's a disclaimer we usually get into, which is that we're not dispensing advice fundamentally here, is what the disclaimer says. What we're doing is we're sharing information, and this is a meetup group. It's supposed to be open. Everyone's supposed to be sharing information, contact information, ideas. I know Bruno here, who's a developer, our wonderful guest. He wants you to send him hot leads for off-market properties, if you know of any, that you're not going to try to snap up yourself, as he is. That is his life, his lifeblood, the lifeblood of his business. You know, Nick and I, we're realtors. We're looking for clients to work with, so please let us know if we can help you or if you can send people our way. Grid is a meetup group that meets monthly. We can't wait to start meeting in person because it's hard to do it this way. I was about to go get a beer and start drinking it because, you know, we'd be serving alcohol and there'd be little things you could nosh on and people could actually linger, maybe go out for dinner afterwards. Hopefully in the near future, we'll be doing that. My name is Carlos Garcia. I'm one of the owners of the DC offices of Keller Williams, and I run a team with Nick Despotidis here that sells a lot of real estate. And most importantly, I'm an investor. Started off that way, used to be a lawyer. And I'd like Nick and Bruno to introduce themselves, and then maybe we can go around the room.
No, I got a whole slide for you, but if you just want to give the highlights, and then we could go into your real intro.
Yeah, sure. So, like Carlos and Nick mentioned, I'm a real estate developer here in DC, and you know, we do condo conversions. We've done. I mean, we started with flips, and we did condo conversions. You know, from 2 units to 20 units so far. And you know, we have projects a little bit all over the city, except in upper northwest, and we don't have anything also in southeast past the river. I mean, we never done anything southeast past the river, not because we didn't want to. It just never happened.
And my name is Nick. So I work with Carlos. Used to be in banking. Have a looking for a nice multi-unit or a large house. So if you come across any, let me know. I would love to do it in Columbia Heights, but I think Capitol Hill is where I'm gonna keep my eggs.
You muted, Carlos.
Would anyone else like to introduce him or herself? I see people I'd love to say hi to, like, well, Joe, we've talked already, but Jad, Sean, Tim, Anetta. I'm just calling out names I recognize.
I see Corey,
Oh,
Joe.
hey, I'm Anetta.
Hey, Annette.
Hi, how are you? I met Carlos last year. Currently studying for my real estate license. Hopefully, I pass the exam and get my license and start practicing. But I currently work in restaurants as a server, so I'm looking to segue my way out of that and get into real estate. And yeah, I mean, I'm learning. I love these groups, these monthly get-togethers that you organize. They're very helpful. Gaining a lot of knowledge, you know, regarding real estate as a whole, and you know, and maybe, you know, sometime down the road I'll you know, start investing myself. So that's where I am.
Awesome.
Hi, Sean. I was going to keep quiet, but Carlos called me out. Took me long enough to find the mute unmute button on here. My wife, Dr. Tammy Lamb, and I have worked with Carlos in the past, purchasing properties, and it's something we always talk about, and we figured this is one of the best ways, whether, you know, being the bank or flipping the property. We want to come in at all aspects. So that's why we're here. She's actually on call right now, so I'm sitting in. I think she'll be joining us here in a few minutes.
Oh, that's great, Sean.
Yeah, and forgive me if I do have to. She's going to log in on her computer because I may have to jump off here in a second to go to another conference. But we look at participating more often in these meetings. Thanks.
All right. Good to hear your voice, Sean. Is the mighty Jad by his mic?
Yeah, I'm here. How are you?
What's up, man?
Nothing much. I'm really excited about this month's topic, about how I can lend out my money and make money off of it. Who doesn't want that? You know?
Sounds a little more
I mean-
passive. Hey, man, we saw you for a second and now you're gone. What happened?
Oh, so I don't know how the thing, like, yeah, I'm right here. Sorry.
Oh,
So yeah, so I've been actively flipping. I have 4 houses that are on the market now. Luckily, they're all under contract. The market has shifted a little bit. I had a new listing go on the market today out in Haymarket for like 730,000. The demand was strong. We had 4 showings in the first day on a Wednesday. So it still shows that their buyers are out there, but they want a house that's very well done. So I had good feedback, no offers yet.
Yeah.
And
Is that a little high for Haymarket, or?
no, I mean, no, it's on 2 acres. It's right off 66.
Okay.
And there's houses in Haymarket right now that are going for 1.8 million right there in the subdivision.
Jad, I had a conversation with my business coach. He said, watch, there's a pattern. I said, what's the pattern? He said, after about 2 or 3 weeks, the person who wants to buy your house will reveal him or herself. I said, what do you mean? He goes, they're more disciplined now. I said, what do you mean? He goes, they want the house, but they're disciplined enough. They say to themselves, let's see if it can sit for 2 or 3 weeks. Then the guy will be a little weaker in the knees, and that's when I'm going to negotiate with him.
Well, that's true. Yeah, there was a lady in Middleburg. She's a good friend of mine. I told her, I was like, this house is perfect for people. Like it's a huge 4-level, has huge ceilings, sun through. She was like, Jad, they think that the market is going to crash. They're waiting for the prices to go down. And I was like, really? I was shocked to hear that. But the house would have sold today. It's just one lady didn't like the flooring. Another person thought that the house was too close to the road. So we'll get there. Like I said, I had a house in Stafford. The demand was really strong. I had lots of showings, but there was 6 other houses on the market around my Stafford house. So buyers were, they had their pick. So I had to drop it from 438 to 425. And now it's under contract with a VA buyer. I had a really bad contractor out of Annapolis, Maryland. It was highly recommended on all the Facebook stuff. I used him and it was a disaster. The tiling was crooked. The bathroom caulking wasn't done properly. I was like, you know what I learned about that contractor? I learned that if someone tags someone on Facebook, a contractor, never use that. No one will ever tag a good contractor on Facebook, ever. It's just never going to happen. So if someone does tag and says, oh, this contractor is amazing, I think they feel bad for that contractor because they're not giving them any more work and they want him to be someone else's problem. Because there's no way this guy would have been tagged like 4 different people and his work is that bad. It just
we should collect these rules of thumb. My rule of thumb is if someone on next door says, hey, I'm a local electrician, happy to help.
Maybe he just has a lot of cousins.
I mean, it's terrible. So anyways, yeah.
I hope that you're hearing this good news, Tim. I don't know whether your mic is working. Good to see that you're on this call, but there's a little bit of power in the hands of buyers now.
Yeah, I mean, I had a house in Middleburg, I had a house in Stafford, I had a house in Annapolis, and a house in that. I mean, I dropped the prices on all 4 of them. They're all under contract. I mean, I'm still gonna make like 90,000 on one, 65,000 on another one, maybe 40,000 on one. I mean, I'm averaging between 40 to 80,000 a house, but like the one in Middleburg, I should have made 150 on it. I had to drop the price by 50,000 because I didn't realize that there was a fire department that was hidden behind, like across the street from the house. So, we're still making money flipping, but it's just a lot harder.
Small margins of error make a big difference in pricing.
Yeah, it's huge.
Which is interesting because before, like buyers, oh, that's fine. That's fine. I like the house. I'll get used to the sirens. But I think the story someone told that they're getting a little, they're waiting. They're waiting for that price drop. And I feel like that way. My buyers, I'm like, what are you waiting for?
So Nick, are you gonna talk a little bit about being the bank? Are we gonna do it together?
Sure. Let's do it. Anybody else wants to share? Donna, Corey, Joe, did you want to do a little intro? I know you're looking for a deal, a house somewhere in in these neighborhoods. If you're looking for a deal, shout it out because we have a good network here. So shout it out if you're looking for a deal.
Can I introduce myself?
Sure.
Hi, my name is Donna Parsons. I own a bookkeeping company here in Virginia. I do have some properties that I've been holding on to for the past 16 years.
Are we allowed to see you, Donna? Are we allowed Are we allowed to see you?
Oh yeah, hold on. Okay.
There you are.
Hi. Okay.
Hey.
So I'm trying to get back into real estate investment. in DC, Maryland, and Virginia. I'm also looking into Opportunity Zone, trying to be certified so I can talk more educated about Opportunity Zone funds. So that's me in a nutshell.
You want to learn about opportunity zones, you mentioned?
Yeah.
Okay. I mean, that's pretty simple, I think. You buy when you buy in an opportunity zone. If you keep the property for 5 years, you get a certain percentage. If you get 5 years is 50%, 10 years is 100%, but it varies. It scales down the capital gains. But if you're doing flips or whatever, your income is considered. I mean, depends how many you do, right? So I cannot take advantage of some of that stuff because when I sell so many units that it's considered my primary activity, and it's not considered as an investment anymore. It's considered as income for the IRS. So if it's a property that you buy, you should hold it for a little while before you, hold it, rent it before if you do a flip in an opportunity zone, you're not going to get the tax benefit. That's what I'm trying to say.
Tax deferment, okay.
Yeah. So you need to hold it for a while. And a CPA can advise you on what is a good time to hold it, but it's also to get the full tax deferment, you need to hold it for 10 years. It's proportional. So like 2 years, I think it's 80%, 20%, 5 years, 50%, and so on.
Okay, thank you.
Sure.
And if you yeah, go ahead, Joe, and share your information on the chat. And Angela, right? No, Donna. Share your info.
I'm Donna. Okay.
Oh,
thanks.
yeah. And where are your properties too? That would be great.
My properties are in Georgia.
Okay, the state, yeah, okay.
Yeah.
So hi, my name is Joe. Along with my partners at YCI Properties, we buy and hold. So we use the BRRRR strategy, and we buy, renovate, refinance, and rent them out in specific neighborhoods in DC. We also have a property in Frederick, Maryland, and we're always looking to buy to renovate and increase value, refinance, and rent out in DC mostly. That's what we're doing. And I also put my information. Also have an Instagram that we share what we're doing online, and hopefully provide more information about how to invest, things to look out for, and things like that. So yeah, I'll put my info in the chat box.
Thank you. Thanks, Joe. All right, so we're going to kick it off here. How to be the bank. First, I wanted to introduce our guest, Bruno. He is an expert, or I guess a rising star, I could say, in the development world here, or small world in DC. Go ahead, Bruno, if you just want to give a little background, who you were before you were, got the real estate bug.
Sure. So that's kind of, wow. I mean, I'm looking at this slide. It looks very nice. So thank you for having me here. That's the first thing. So I've done quite a bit of stuff, and I wanted to give a shout out to Annette. I mean, I was a waiter back in the day, a long time ago also. Then I became a software developer for about 10 years. I did consulting, and that's when I started doing some basic lending, right? Some basic lending for people. Mostly some friends of mine, right? So I knew friends that were doing flips, and some of those friends was actually Boyan, who became a partner now in those condo conversions. So software developer, and then decided to become a real estate developer, and I do some lending from time to time. And being the bank is not as easy as it sounds. There's a lot of things to consider, and you don't want to discriminate when you lend money, but you also want to make sure you get your money back. So it's you have to look at a lot of things to make sure it works for you and for them.
That's great. So that's great. It has to work for you and it has to work for them.
Right.
And I could just like chew on that for a minute because that's really what it's about. And you said it, problem solving. You have to solve a problem. And where
And yeah, like you say, problem solver. But you see, people think of a problem a lot of times, I think, in the wrong way, if I can say it that way. I think they think of, oh, I have a problem, how I'm gonna solve this. Let me think what kind of problem people have. And sometimes it's a lot simpler than that. You're thinking, okay, I have this deal, how can I make this deal work? How can we push the boundaries of the rules of the different things that I know, to make something work? So I was exploring something with Carlos actually a couple of weeks ago, which was possibly financing a condo conversion with a 1031 exchange, because it's not typically used for that kind of stuff. And so we got on a call with Carlos's guy, an attorney that deals with those type of issues. We drilled them with a bunch of questions to see if there's a way to make this work. So my problem is to raise more capital, right? We always get to a point where you run out of money. You have a lot of money, you run out of money. You have little money, you run out of money. You always run out of money in real estate. One day you have $1 million in your bank account. The next day you have like you're looking for $300,000 to pay some stuff. So it's there's a lot about timing and things like that. But if you want to grow, you need to get more money, and that's kind of like where this little expertise came from, financing and problem solving and putting things together. You there?
Yes.
Okay, I lost you for a second.
No worries. The little one's getting a bath that needed some.
So you see, that's that's the thing. You can lend money to other people just like the bank, but there's some rules, right? You have to be careful to lend money to actually companies and do commercial lending versus individual lending, because if you lend money to individuals, you're bounded by a bunch of regulation and you need to have a license to lend money. So when you do a real estate deal, you always have to do it through a company for the purpose of flipping or buy and hold or whatever you decide to lend on. So those are the
now. Do
those
you
are some of the main
actually
rules.
go on the website for people to scale it back? So you're saying, we're talking about you could lend money, but you have to go to the where
I also go to the bank. I mean, I use all of it.
Right, but if I wanted to lend money, there are people out there to help you set up a company, right? Do you actually open up the LLC?
Stuff, yeah. So there's multiple ways to do it. I started with my 401k. I started with my 401k like a lot of people when they start in this in the lending. I opened what is called the self-directed solo 401k. And there's some rules about it. And there's companies that help you do the paperwork. I mean, back in the day, I think I paid $700. And the way it's done is through the mechanisms of a trust that follow the rules of the 401k, the laws. And then they give you those abilities to invest in anything that the U.S. government lets you invest. There are some limitations, but they're very small. You could invest pretty much in almost anything with this mechanism. That's one of the main vehicles that I used in the past. Now it's a little bit different.
IRA. So just to scale it back, because this is fascinating. The most of the money people are saving, like average people, are storing it in their retirement, and instead of that, you could use your those actual investments. You're saying that you saved up for.
Yeah, you could buy a house with your 401k.
So if I have 300,000 in my,
or even less. Let's say you have 100,000, right?
100,000.
You have 100,000. You can go and and buy, let's say a 150, like for easy. I mean, I'm lending money right now to somebody. It's 150,000, the full deal, and the person's gonna do a flip, and we should get. And the return should be around 220 or something like that, as long as assuming that they perform. So
220,000
yes,
back out of
back,
150, 70K.
right.
Plus or
70K profit, right? Plus or minus the expenses, the expenses and things like that. So if that person had that money in her 401k, she could just put all the money down, buy the property, do the flip, and get it done.
Did you back that by real estate?
So in this case, what happened was I lent the 150 and I secured the money with a lien, a first position lien on the house, and I structured the construction draws so that the person, they would, as they would go forward with construction, I would release more money. So, if I give her 150,000 for property that's worth 100,000, she could take the money and run, and I'll be out of my money, which out of 50,000, because I could always get the house and sell it.
So what you're saying is, one, you're being careful, just like a bank.
Right. So you have
saying,
to be,
hey,
yes.
look, if you don't perform, I'm going to take this asset and go after you. And you have a lawyer that helped construe this. It's, Bruno's a very smart guy, but I'm sure he's not writing the paperwork for all this. So
yeah, that's for sure. For sure, I'm not doing that. There's so many rules and regulations, and let the experts do what they do, right? I mean, I'm a realtor, by the way, and I just put a house under contract, and guess what? I asked Carlos to be my realtor. I could have saved the commission, but I don't sell a lot of houses. I mean, the house that I sell, the condos that I sell, we give it to realtors. I focus more on other parts of the business. So I wanted to have a good shot at it. So I went to the best guy I knew. And so I called Carlos, said, hey, Carlos, can you help me get this house? And guess what? We got the contract on it. I don't think I would have gotten it if I had done it by myself. That's where, expertise come into play. So for lending, it's the same thing, right? For the paperwork, I mean, have the attorney do the paperwork. Don't play around with those like stupid websites where they give you the paperwork cooked. That stuff usually you may get burnt. In some states it may work, in some other states it doesn't work. So it's a little bit tricky.
So if you need those resources, just email Carlos and us. Happy to give you a lawyer, an expert to draw up the paperwork. And it's backed, right? Just like a bank. And the cool thing about what Bruno was saying is he's also going to give the purchase price. I mean, this is a lot. This is like 100% financing, it seems. You're giving them the cost of the property acquisition, which is
so,
like what?
Yeah, that was in this case. I gave the person 100% financing, but I don't think I will do it again. That was now the more I think about this, it was kind of like it was somebody that came highly recommended by some other people that I knew. So I gave 100% financing, but I don't sleep as well as I should at night because of that. I mean, I'll probably do like 80 to 90% financing, because it's always good for the other person on the other side to have some skin in the game, for two reasons, right? One is to protect myself in case I have to foreclose on them and there's some loss, or we have to sell the property at a loss. There is this caution that doesn't come out of my pocket. And two, so that they're more motivated to finish the project, right? When they have money in the bank, they'll feel more motivated.
Yeah. So skin in the game, that's a good thing. You want to write that down. They want to have skin in the game. That way, that they're motivated to get this construction. You want to operate like a bank, but you're not the bank. So you need a contract to draw it up, which we'll work on. So what is the process? And that's what Bruno's talking about, of being this private finance or being the bank.
So look, there's
the what you talked about. I said, so how do you do this? And you said you have to file that promissory note, right?
Right. So what the lawyer does, I mean, so it starts a little bit before that, right? First, you need to make sure that if you cannot evaluate yourself the value of the property, you should probably get an appraisal by somebody that's qualified, right? Or talk to somebody you trust that can evaluate the property to make sure that, if the property is worth $100,000, you're not going to lend them $200,000. Makes no sense. So evaluate the property, either get an appraisal or you do it yourself. In that case, I did it myself. I know how to do comps, so I did the comps over there. Then after that, you need to secure the money, right? And so you do, the attorney writes a promissory note, and when and then they have to sign it, and it's a secured promissory note with a lien that gets recorded on the property, which is recorded with the recorder of deeds. And when you pay for the house, essentially, this is all done at the title company. So you wire the money to the title company, and then the title company the company just releases the money just for the acquisition, because usually those are like commercial loans, and there would be two parts. So remember, the house costs $100,000 in this example, but the person still needs $50,000 to do the repairs needed. So you would then let that person advance the funds for the construction, and then you would reimburse after you evaluate how much they've spent. But you have to be also careful, right? So there's inspectors that can go on there and review for you what work has been done, or you can do it yourself. I mean, it's all it's all up to you.
Interesting, because again, risk. You're trying to evaluate your risk, so getting an inspector to make sure the work is done. I'm just thinking Bruno's like a superhero, right? He meets Carlos or whoever the buyer is, gives him the money, looks at the property. So there's a lot of moving parts and people that you have to trust along the way. And I'm hearing inspectors, title company lawyers. So it's not just a one-man show. You have a lot of professionals, lawyers, now a title company. So Bruno's not collecting the money, hey, pay up. He's doing this through a third party. He's making the payments just like a bank doesn't knock on your door. It's a
right.
third party.
However, they do pay. So there's two ways to do the loan, right? One way sometimes I do a balloon loan. So when they sell the property, they pay everything, including the interest. And sometimes I do, I just ask for my monthly payments, and that's deposited directly into my, my financing company's account, essentially.
Yeah, and just a disclaimer, we want to emphasize commercial. These are not traditional residential mortgage loans. It's a commercial loan, the repayment, which happens to be secured by real estate. So just keep that in mind. You're not actually a bank. You're securing a note using.
And you should never lend to a person, right? You should never lend to a person, to an individual personally. You should never do that, because in the law you fall into a different category, and you can get into trouble. So for example, you cannot charge hard money rates to a person, but you can charge it to a company. So when they buy the house, it's their company that's buying the house, like a single member LLC or something. So those are small distinctions, and you make the loans in a way that they are personally liable, plus the company is liable, plus the house is on the hook for repayments.
And Bruno, question: would you be a lender on a deal as a second lien like position, or just always first?
I'll do it, but very rarely, because I actually raise money for myself. So what I do is I have a pile of money that I use for my regular real estate development business, and I have another chunk that I lend out, which is it's other people's money that I do lend out, but I cannot use it for my deals because that would put me in some conflict of interest type of situation. On a second, it could happen, but usually I would have probably very high rates. I mean, I'll have to look at the deal. I mean, we do everything. It's all about looking at the deal.
He's a problem solver.
Right. I mean, if it makes sense, right? If it makes sense for myself, or usually there's more risk right there, because there's a little bit more risk. But if the person has a good track record and stuff, we can definitely talk about it.
What are the risks when
which,
doing from your side, being the bank, lending the money, getting the
well, there's
lawyer?
plenty of risk. There's plenty of risk, right? The first risk is if the person doesn't finish the work. I mean, like for example, this small loan that I made for 150, it's in West Virginia. So I don't know anybody in West Virginia. I mean, like, I don't even want to go to West Virginia except if it's cool go for a hike in Shenandoah or something, right? I mean, it's just too far. It's just too far. My crews are here in DC. I mean, those guys are not going to want to go to West Virginia to go flip the house if the person doesn't do it. So I'm trying to stick more. I mean, that's the lesson I learned, because I was thinking, okay, I made this loan to this lady. She's very nice and everything. And then I was thinking on the back of my head, a week later, I woke up and I was like, man, what about if she doesn't pay me? Usually I would just send my guys to finish the job after I repossess the house. But in this case, they're in West Virginia, so she better finish the job because I don't know nobody there. And I don't want to go and meet contractors and get contractors because, like somebody was saying here earlier, you get burnt by those people if you don't know them. And you get burnt, and you're the one who get doubly burned, especially if you just repossess the house, which is a very good way to lose money. So that's one of the risks: is the person going to finish the project? The second risk is, what about if there's a legal action, right? Like whatever, you encroach on the neighbor. Then there's a lawsuit and the guy cannot pay you back, and then everything gets kind of messed up. Then you have to possibly do a foreclosure, but then who's going to buy the house if there's a lawsuit? Because nobody's going to lend money on a house. There could be, I mean, many things. There could be, what about if the guy stops paying the taxes? Then you can get a tax lien in front of you. And, when they sell the property, government gets paid first.
Mechanics lien, Bruno.
I'm sorry?
Bruno, mechanics lien.
Right, mechanics lien, that's another thing. But usually when we release the money for the next round, we try to always get a lien release from the contractors. So as the money is paid, we ask them to sign a lien release for the work that they've done.
Yeah, but Bruno, if you fire them in the middle of the job because you think they're not doing a good job, this has just happened to another person. She partnered with a lady who's supposed to, they were partners, and she got a stop work order. She doesn't know how to remove the stop work order. And instead of just going away or being ashamed, this lady just left the job site and then put a mechanics lien on the house.
So that's a nightmare.
And so now this lady, she has to go find a new contractor, pay them again, and she has to deal with this mechanics lien from her partner that has no idea what she was doing when she was doing the renovation on the house.
Yeah, that happened to me, actually. I fired a contractor. She tried to put a mechanics lien, but I had my paperwork in good shape, so I got it dismissed. But guess what? I missed on a contract because they wouldn't even let me bond the work. Like, for some reason, it was in Baltimore County. That's why I tried to do everything local. I was helping one of my investors that bought this house. That was kind of like a nightmare. So I hired this lady who was like, I'm very good. I know what I'm doing. And she goes over there. I'll tell you another one on this one, on the risks. So she went over there. She made a mess. I had to fire her. But we were discussing about at the same time, because before she started finishing the flip for this investor of mine, she was telling me that she could do condo conversions, and we were talking about it and possibly discussing about doing a condo conversion together. And when I saw that she couldn't even do the basics of flipping a house, I was like, forget it, we're not doing a condo conversion. That sounds like a recipe for disaster. So guess what she did? She tried to put the mechanics lien on those houses, but I had all my paperwork. But actually in her case was a little bit more tricky because I got her to sign, because she wanted to do the condo conversion. So I got her to sign to agree to finish the work, but then if she wouldn't finish it, she would be charged $750,000 of penalty per day to motivate her to finish. So she was greedy and wanted to do the condo conversion because we were talking about much bigger numbers. So she signed, but then she didn't finish the work. She totally she left the house in disarray. So when I fired her, I had accumulated more money than I owed her, basically, on a contract on the penalties. So I was able to get away with it because not get away, but we still had to go to court, and it dragged for 8 or 9 months where I couldn't sell the property. But at the end by the end, I won because she didn't finish the work, and I wasn't gonna pay her for work that she didn't finish. And so that was kind of messy. But then guess what? I just I bought the condo conversion, actually the one like a couple of weeks ago on Ontario. My lender calls me and says, "Hey, what's up with this lawsuit you got going on?" And I'm scratching my head. I said, "What lawsuit?" I go look on the court documents. Turns out that this lady is suing me because I didn't lend her money. I mean, she sued me, the company, and everybody. I mean, that's nonsense because, my attorney is I talked to my attorney. She says, "No, that's nonsense. We're going to get everything dismissed." But she's suing me because I didn't lend her money. I mean, this is just crazy. I mean, that's the risks you're having, like if you meet some nutcase like that. So yeah, those are the risks that I can think of.
Yeah. And kind of like you said, the safety net is, repossessing the house, but it sounds like, I like the quote you said, a good way to lose money is repossess the house. So hopefully it doesn't get to that.
Yeah.
So let's review the process, if I may. So the borrower signs a commercial promissory note, define the terms of the loan. So the borrower is signing a promissory note that they're going to make payments and they're going to make good at interest, repayment terms. So all that stuff is going to be held by a lawyer. That's who's going to help you out with this paperwork. And also an agreement stating that the loan will be used to acquire a type of a property and pledging the property as collateral. So we're definitely collecting collateral. Borrower then signs a deed of trust, giving a trustee, usually that attorney, the right to foreclose and take the property back. So this is all, official. The real estate attorney will draft these documents for the lender, and the borrower usually pays for the cost of preparation, around $1,000. Which, does that sound about right for a lawyer to draw up these documents?
Actually, yeah, it could be less. Actually, it depends on between 500 and 1,000. That sounds actually in a way. It depends how busy they are. I've paid 500 and I've paid 15. I mean, the borrower has paid 500 up to $1,500.
If I can just chime in, I don't know whether Paolo has anything he wants to throw in here. He has to leave shortly. Actually, 4 minutes ago, Paolo, I think. I just thought I would let you throw anything out there since you're a lender yourself, private lender. I've just learned through the chat.
Yeah. So, Carlos, thanks so much really quickly for squeezing me in. I've got to jump here, but my name is Paolo De Jesus. I am a mortgage broker and local investor here in Maryland, and I'm a passive investor in a couple of development deals in Florida. I am direct to an institutional debt fund called Riverbend Lending. We've been only around for about going on our 4th year. The first 3 years, we've closed over $1 billion worth of deals. Not all that much as it relates to real estate, but it's definitely quite impressive given the short period of time that we've been around. This year, we are on track of surpassing the $1 billion mark. And I mostly work with developers and syndicators and investor groups across the U.S. I'll send a quick little, group chat to, with my contact details. And if anyone has any other questions, definitely reach out to me. I'd love to help out, just bouncing some ideas off of me. I've been in a very blessed situation to stand on the shoulders of giants, very, very smart developers and real estate investors who've been doing this for quite a long time. So I've been able to learn a lot, soaking things up like a sponge. Again, Paolo De Jesus, I'm done speaking. Carlos, thank you so much. I appreciate it. Have a great night.
All right, Paolo. Thank you.
Hey, nice talking to you. Nice meeting you.
Paolo.
Thanks, guys.
All right,
Thank
and we
you.
talked a little lastly about the risks. So you definitely want to see which jurisdiction is borrower friendly. So yeah, borrowers can definitely use tactics to kind of slow their steps. So you definitely want to check and maybe do a credit check. I don't know if you do any other background check on people you lend to, but you know, a good credit check you could always do on Equifax or you know, one of those third-party sites.
So quick note, this actually, it's relatively easy to foreclose on those commercial notes. It's much more difficult when you're doing like a lease or something like that, right? Because it becomes their primary residence. But for commercial, you know, commercial notes like that, it's a lot easier to foreclose usually than, you know, a mortgage. But it still takes up time. It still does take up time. Oh, that's the latest we did.
Yeah, so and let me yeah, so this is an example just to showcase, and I will pull up the photos here.
So this was yeah, this was actually, yeah, you should probably go to the pending, the 689. That's probably real photos.
Okay, let me do
It looks like there's maybe real photos. Yeah, those, yeah, there are. That was a staging. So this is one, this was a townhome in Brooklyn, and we just turned it into 7 condos. This is like one of the penthouses, basically.
Wait, so 1 townhouse into 7?
Yeah, yes, sir.
Oh, wow.
We have done 9. The other one that I sent you, I think, is 9.
So nice finishes. You got the so it looks like, what is important? It looks like people like windows, like glass.
Yeah, and windows light is very important, right? I mean, even the basement units, we try to make big window wells and go as far as we can on the public space. I mean, as far as we can legally on the public space and up to the public space. Try to make it as big as possible so as much light comes in. I mean, this is just critical. And
it looks like a, you know, you have to design them.
Yeah, so we designed, I mean, a lot of the work happens in the plans. A lot of architects, they do good work, but the buildings look nice, but they're not sellable. And that's, I'm not here just for, you know, I'm not just here for charity. I'm trying to make a dollar here. So it needs to be sellable and make sense for the buyer, and the space needs to flow. And, you know, the architects, sometimes if you rely 100% on them, you may get burnt. They make some of those mistakes. I mean, mistakes, you know, the layouts are not as good as they could be. And sometimes it's just good to partner with, you know, with a realtor that's going to sell your building to discuss those things. So it makes it easier for them, so they can help you.
Yeah, and then another project.
Yeah, this one is in 14th Street.
Bruno, what made you choose Brooklyn? I have a property down the street from there. It's like 30-second walk from there.
Which one? I mean, we build where we can build. Personally, I did live in Brooklyn for over 10 years, and I love the neighborhood. But I'm not choosing it because I like it. I'm choosing it because, you know, the price of the building made sense. I look at it from a numbers perspective. I don't really discriminate in the area as long as the numbers work. This is another one. This is in upper 14th Street. Is a 39 block of 13th Street. It's pretty high up. And where's is it on 12th Street, your property in Brooklyn? Because if it's on 12, we might be interested in buying.
Yes, it is. It is. It's actually by Primrose.
Oh yeah, Primrose.
Two zones there. Two zones.
Yeah, Did you sell it to somebody, or is like a single?
No, I
family?
own it. It's a 3-unit building.
Oh,
he does Section 8.
I see. Section 8 is a good model. We want to get into that, but that's later when we make a little bit more money. No, I'm just joking. It's when we find a deal that kind of makes sense.
Yeah, I wanted to add another floor, another apartment. But
yeah, you may be able to put. I mean, depending on how the building is, how wide it is, you can put 7 on there. So maybe you may be interested in we develop and you do the burr. You pay us back with the refinance.
Yeah. Currently is rented long term, but maybe at some point it's not the best and highest use. Maybe I can do better in terms of value.
Right. But that's, you
What
got
what's the zoning on that one? It's on 12th Street, no?
no,
Yeah,
this
yeah,
one is on
it's on
14.
Oh no, I'm talking about Joe's. So 12th Street, that's a
That's
good
mi-
zoning.
Yeah, it's mixed use, MU4,
Oh.
and there's another
Oh.
one. Yeah.
Huh.
Yeah, we take all those 12th Street we buy, we're buyers of those, and we love Brooklyn. In Brooklyn, we have the other one that's not shown here. It's in, we haven't built it yet. You know where the massage place was? The physical therapy?
Yes. Oh, yeah.
Where we have that lot, we're gonna make 20 units over there.
Yeah, I saw some work getting started there, maybe.
That we left, we put the people for the pantry, the food pantry for the
Yeah.
we have this lot. We bought it. We are finishing permitting hopefully anytime soon. So those are two other buildings we did.
Oh, right next to this restaurant. Did they open up this restaurant?
No, it's a house now. They're gonna lots something. They bought it. The restaurant is up the street.
Sorry. There we go. So I guess that we are done early. 6:45. I don't know if someone's
I think I got it.
okay, thank you.
Took me a while to find it.
So yeah, we went through these quickly. I felt like we were all long-winded, but we do have some time if you wanted to stay. We are doing how to invest in apartments and scale up your portfolio. So we're going to have a guest for that one next month. So look out for that. We really want to start bringing more guests and increasing the deal exchange, finding deals for you, and then also, helping you as your realtor. Of course, we always need the business. Man, Bruno,
Thank you.
I enjoyed talking with you in preparation to this, and maybe did you share your information?
No, I'm about to do it right now.
Oh yeah, because Joe is that's on 12th Street. That's a great connection, and just want to start connecting you guys so you guys do deals together without us or with us. We want to create a group that does deals together. Contractors, developers. Trying to get more people involved, and hopefully, maybe in the spring or later we could have one in person, so we could start bringing people together.
Yeah, I just dumped my thing on the chat.
Excellent.
Company name and my cell phone.
I'd like to close this out by looking at a little bit more data. And this is provocative. We started off by looking at data that's local to DC. We saw that roughly 8% appreciation through the first 3 quarters of this year compared to the first 3 quarters of last year. It gets a little confusing when we read the national press because they're talking about a United States real estate market. I do have some info that I've been looking at lately. It's sort of been blowing my mind. Shane, are you in a position to let me share the screen? Because when I tried a moment ago, it was disabled.
I can share it for you. If it's not working on your end, that's probably better for me to just share it.
Oh, really?
Sorry.
You don't think that there's a way to?
You have to be in the host link, and for whatever reason, you had trouble getting in at the beginning, and I think you're in as a regular guest. So.
But can we disable or enable participant screen sharing?
Let me see. Hold on.
Function.
Hold on 1 second.
All right.
Only all
So
participants.
guys,
All right, go ahead.
Try now. Okay, Goldman Sachs last week. Yep, it's going to let me. Thank you.
Sweet.
Goldman Sachs last week came out with a statement that let's see here.
This article, huh?
Yeah. How does it look on your end, folks?
Increase the size, make it full screen. I know you might lose out some. Yeah. And then zoom in.
The zooming in part, I'm not sure I can do. People on
do-
their individual
do
screens
you?
may have to. People on their individual screens may have to increase the size because I mean it's very big right now on my screen, Nick.
Okay.
But the bottom line is that Goldman Sachs said real estate prices will go in 2022. I don't understand it. It seems like the Yahoo's missing a word. Will go up 16% is what they said. All
Hey,
right.
Carlos, to that, do you think it has to do with inflation?
I'm gonna zip into the underlying report that this Yahoo article reports on. But basically, if you look at the second paragraph, it says, unfortunately for those sideline buyers, there's more bad news in the next 15 months. Through the end of 2022, Goldman Sachs is forecasting U.S. home prices will soar another 16%. And they've been up 17.7% over the last 12 months across the country. Locally, I think real estate hasn't gone up quite that much. I think there are probably a lot of lower cost.
Carlos, not only that, 1 in 7 houses is currently being bought by a hedge funds. 1 in 7. And
Yep.
so once I heard that, I went and bought 4 houses this month, all in Fredericksburg, in Stafford, because I can still get 1% on my rents. But I bought 4 houses that I wasn't planning on buying just because I was like, holy shit, 1 in 7 houses is being bought by hedge funds.
So there's two things. The fact that they're doing it and why they're doing it, right? I mean, 1 in 7 is 15% almost. That's a really disruptive element coming in.
Not only that, Carlos, it's so bad that I did like a mastermind thing on a boat where this gentleman owns a very big hard money company. He has investors that are builders that are building entire subdivisions in North Carolina and are already exiting it to the hedge funds.
Yeah,
The entire subdivision.
hedge fund is happy to just buy it and worry about the exit later because of, I'm certain, I mean, I'm not a person talking to hedge funds, but I know that they're looking at the data that Goldman's looking at, and some of them may be depending on Goldman's analysis. But what basically the next paragraph goes on to say is the supply-demand picture that has been the basis for our call for a multi-year boom in home prices remains intact. Of all the shortages afflicting the US economy, and Bruno was asking about inflation a moment ago, the housing and its shortages relative to demand that create inflation, the housing shortage might last the longest. They don't see prices correcting anytime soon. In fact, they're forecasting another 6.2% jump in 2023. So what they're saying is that through 2022, it's going to go up 16%, and then beyond that, we will not have spent all that tension, supply against demand. There's still going to be 6.2 more movement up.
And also, Carlos, they're saying that every year 5 million people are turning 30. And those people that are turning 30 are getting married and having children, and they want single family homes, and they want something where their kids can go and play, and they don't want to be stuck in a high rise in Arlington in a condo going up and down the elevator and all that stuff. So that's another thing in regards to supply and demand. 5 million people turning 30 every single year.
Yeah, that's interesting. That's across the country. There's a group that used to be more active called the 2030 group. That's a DC, Maryland, Virginia group that studied demographic trends. And what they foresee is by year 2030, a train wreck. Demographic trends just pushing population up against a ceiling in terms of the amount of housing that can be available. Due to, well, now I'm going to click into the Goldman Sachs report in a minute, due to constraints that include, a lack of land and regulation. So it looks like Goldman is really, really ringing that bell that you're starting to hear around the country, around like our system doesn't permit enough housing to be built at the rate that our population requires. So you could think of it as a moral issue. If you're a developer, you might think of it as a moral issue, like those regulators. But it's just it's a numbers issue, folks. The rate at which people who want to build are able to do what they want to do isn't fast enough to meet the demographic demand, the growth the demographics are projecting fundamentally. And so the other thing that they'll say in this report, I'm gonna click into the underlying report, is that Goldman was like, hey, folks, we had a supply problem before the pandemic. So this isn't us saying, oh, the pandemic is creating a supply problem. It's exacerbating something that was going to happen anyhow. So I'm not like an of the moment predictor here. It's sort of like the energy that I got from reading the bullet points of the underlying report.
Carlos, if I may, I don't know. I saw this news like a while back. DC, let me read you the headline here. DC plans to add 36,000 new housing units by 2025, guys.
Yep.
But only
Affordable,
12,000 of them will be affordable, they say. Only 12,000 will be affordable.
Yeah, and what about the schools though, Bruno? That's the problem. Even if they do build the 36,000 units, I mean, most people, the first thing they look for is schools. But I guess we're making the assumption.
Well, but the way I'm looking at this.
Wait a minute, you're making me upset, Jad. You're such a suburban dude.
I'm not a suburban dude. I get it. I'm just trying to tell you. Again, I'm making the assumption that people with families will be buying those units. It could be single people. It could be people that don't have children. So I'm just trying to tell you that is just, it's just crazy here. Like in Northern Virginia, one neighborhood, one house is $100,000 cheaper just because it's zoned for a different school district. Like in Springfield, if it's zoned for Robert E. Lee, or if they just renamed it, it's $125,000 cheaper than the house that's zoned for Lake Braddock High School. I mean, that's how much of a difference it is. So I'm just thinking, okay, great that DC is going to build up. But again, there's a lot of young people there. Weed is legal. People want to get high, close to it. But Carlos, the other thing with that's been different now since COVID is that now that people can work from home, there's not going to be that crushing thing of, wanting to live close to the city. You can have, like right now, I have a house that I'm selling out in Orange County, like up near Culpeper. I've already pre-sold it. I bought the house last week for 100, and if God's willing, I'm going to sell it for 500. Like, it's great margins. And my point is that like the people that are buying it can work from home. Could that have happened pre-COVID? No, I wouldn't have gotten those buyers. I would have been lucky to get 350.
We should dedicate a Zoom, one of these monthly meetings to predict, because this is an amazing topic, what you just invoked here with your last comment around, the impact that COVID and telecommuting is having, and the degree to which, because look, before COVID, there was a multi-year trend towards moving into the middle, including Jad, public schools getting a lot better downtown. Not as good as they need to be, but they are improving. And it's true that COVID, where people want more elbow room and a pool and an amazing backyard, and the ability to telecommute, enable you to live in the great beyond, right? And so how is that trend going to battle against the other trend towards, well, but it is nice to be able to walk to stuff and just have cool things everywhere, and the best coffee, 5 choices on your block, and on and on and on. And so those two are interesting dynamics that are somewhat countervailing.
Just to interject, there is, while it's true that a lot of people are, working from home, but a lot of the offices, they still want you to come 1 or 2 days a week, which I think they still tie you up to the location. I mean, who the hell wants to live in Manassas if they have a job for the federal government and they have to be there 2 days a week?
That's true, Bruno. I had a buyer today. I have a house in Marshall, Virginia, and the guy works in Tyson's, and the guy's like, well, I still have to go in twice a week for it.
And I can't wait to build condos for them.
Well, this Goldman article, I want to actually dedicate a meeting to this, to trends, long-term trends, and the degree to which COVID and telecommuting is impacting them, because I think we could have a lot of fun, especially if people could try to make it like show and tell, where you bring, either an anecdotal story or something about the way your business is going, or something you found in the media, to the conversation. I think that could be a lot of fun. But the Goldman article isn't distinguishing between the city and the country, or the suburbs and the country yet. It's just focusing on the supply as a general pool of housing, and understand that this report is thick with analysis and data. I'm just visually showing you that it goes on and on and on. Be happy to share a link to it with everybody, but these 5 bullets at the top summarize the article. So if you read nothing but these 5 bullets, you've got the bottom line rationale for their 16%. First bullet: of all the shortages afflicting the U.S. economy, and this is somewhat repetitive of the Yahoo article, housing shortage might be the last and the longest. Earlier this year, we argued that constrained supply and sustainably robust demand would keep the U.S. housing market very tight, pushing up home prices and rents. Rents too. You buy and hold investors, which I'm one of. Rents too. The boom since then has surpassed even our expectations, with home prices now up 20% over last year. This week, we take stock of where home prices will go from here, how high rent inflation will rise, and whether new deregulatory efforts can alleviate the housing shortage. Second bullet: supply-demand picture that's been the basis for our a call for multi-year boom in home prices is still intact. We still believe it. Inventories remain historically tight. Homes remain relatively affordable despite the recent price increases. Probably one of their charts later establishes that. I'm sure some of you would be curious about how it is that they can assert that home prices remain relatively affordable. And does that apply to our area? Probably not as much as the country as a whole. What data are they looking at to make that conclusion that housing remains relatively affordable? Reason I say that is it's probably a technical answer, versus you go to dinner parties and the emotion that people are feeling is it's so unaffordable. It's getting so unaffordable. So obviously these technical folks are saying, well, looking at, I guess, probably the share of household income that can go to it, they're seeing it's still affordable. I'm really intrigued by that one. And surveys of home buying intentions remain at healthy levels. Our model now projects that home prices will grow further by 16% by the end of next year. Next bullet: does the sharp rise in home prices suggest an even faster acceleration in shelter inflation than our aggressive standing forecast of 4.5% at the end of 2022? The risks do now look more two-sided, especially with so they have some sort of thing, a tracker, a shelter inflation tracker, a leading indicator based on several alternative rent measures, having jumped from 2.1 to 4.6 in just 6 months. We caution the most extreme increases reported in some alternative rent measures provide a misleading signal about the official data. We're getting pretty wonky here because they focus on units to turnover where base effects from depressed rents in 2020 are stronger and government rent restrictions are weaker. Okay, so I guess I'm trying to translate that. Government's not helping as much to keep rents down, and we are coming off of a depressed 2020 in terms of rents. That's at least part of what they're saying there. And is there a solution to the national housing shortage? This one's interesting. Research shows that relaxing the zoning rules and other regulatory constraints that have impeded home building for decades would boost supply and lower prices and rents. But in practice, this has been difficult politically. I'll also throw in, I'm reading as relates to this bullet, that, our system intentionally slowed down the production of housing after the financial crisis because there was so much oversupply. So I think that there's messaging occurring in our media now, signaling to government and to policymakers that, like, you guys need to shift gears. You're behind this issue now. You got in front of it by slowing things down, but now maybe you need to take your foot off the brake. I feel like I'm seeing that in the media increasingly. And indeed, some jurisdictions are taking matters into their own hands. Next bullet, last bullet, some state and local governments are pushing to substantially reduce regulatory constraints, most notably California. California often leads, recently abolished single-family zoning statewide. Oh, I didn't realize they'd done that. Abolished single family zoning statewide. I live in a single family zone. I'm in a single family zone. I can't build a 2-unit here only because of the recent relaxation like 3 years ago of the rules around renting a piece of your own home. Am I allowed legally to rent the carriage house that I've got here? For years, okay, I'm admitting I broke the law. And so were the predecessor owners of this home. They were renting the carriage house illegally because it was strictly zoned single family, and they allowed DC to, in a single family zone, if it's part of your own home, under certain conditions, you can rent out part of it, just like you can do your basement unit in a 2-unit where it's not a proper 2-unit, it's just an in-law suite.
Carlos, same thing happened with us. We own about 120 units out in close to Manassas and Fauquier County and Warren County, and the Section 8 office reached out to us to say, hey, same thing. There's now relaxed stuff. If you guys need help building, we will go to bat for you with the zoning to get you guys going. So if there's any extra land on your property and you want to build more stuff, we can help you push it through.
Oh, that's so exciting. And also, so for you, I mean, I'm excited for you because that's like, you know, that's like your real estate just grew without you making a single move. That's awesome. But it's also neat to see government, you know, in action, actually being a little proactive, trying to solve the problem of.
Yeah, I mean, think about if you own a house and if, you know, you can't evict someone because of COVID right now, how picky are you going to be with the people that you're going to rent your house to? How picky?
Yeah.
You know, and so you have all these people staying in hotels, like the 4 houses that I just bought this month. They're the people that I'm going to be renting to. They're currently waiting in a motel to move into this house.
Yep.
And the government's paying like $2,800.
Yep.
For a house that, you know, costs like $200,000. It's crazy.
That's radical. That's such a great. I don't have anything like that, and I've got some beauties, but not nothing like that. So listen to this about California. They did that single family zone rule. No single family zoning statewide. That is radical. And then the article goes on to say, White House hopes to use housing funding to incentivize others to follow suit, but much of the proposed $400 billion in housing-related grants and tax subsidies is likely to be cut from the reconciliation bill that they're negotiating now. As a result, nationwide changes seem unlikely for now. So this contributes to our conclusion, is I think what they're saying, that, you know, the supply is just going to stay tight for a while, and limited state and local changes are only a partial step toward relieving the housing shortage. So I gather we're going to start hearing more stories of local jurisdictions just saying, hey, if it's not happening on a federal level, we're going to do it on a state, you know, city. County.
You know, Carlos, all that stuff is good stuff. But look, for example, in DC, we have this, you know, they zoned in Carver, Langston, a huge chunk to be multifamily. So we bought a building over there and we're developing it. But the neighbors, they didn't want their looks of the neighborhood to change. So they all got together and they got the entire area, not entire, but a huge chunk of the area, you know, rezoned back to RF1, which is single family, not single family. You can put 2 over 2. You could put 2 units at most, but it really killed the economics because it was an area for. Somebody was asking before, I forgot, for opportunity zones. It's an area that is an opportunity zone that was meant to stimulate, you know, businesses. I mean, opportunity zones are not only in real estate; they're also for people that have businesses, and if they have their business in that area and they operate more than so many employees, percentage, then they avoid capital gains on the sale of their business if they keep it long enough. It's not only for, you know, real estate investors, but so DC just went ahead and went to the residents and rezoned the whole area. And I guess, you know, they're okay with the homeless population over there and the poor people that are doing drugs on the corners, which are just terrible. Why not let the area be, you know, improved and help those people find permanent housing? That's
you know, one of the reasons politics can be so distasteful is because it's just so partisan. So no one ever wants to admit anything about their own party. But one thing that's being written in lately is that there are a lot of left-leaning people who love to talk about, you know, how they want to help people, but then when they're like, well, how about if we do it down the block from you? They're like, oh, now wait a minute, I didn't say that. So it's very hard to get people to truly to truly flex.
Yeah, that's true. That's true. I have a friend that has this nonprofit that helps the homeless, right? We talked about him a little bit before, but yeah, they did that, and they built a huge building for the homeless population, and the neighbors, they didn't like it at all for a little while, and then they realized that nothing happened. Like, you know, it's there for a few years now, and everybody's is chill about it now. But yeah, they're just people. Yeah, exactly. So, but they had some rough times at the beginning. They were trying to get you know, the building not built, essentially.
Yep. Well, that's one of the things I'm proud about. One of the reasons why I'm proud to be in business with you, Bruno, is that you have these interests. Bruno's got a company he's helping to start that's going to facilitate homeless people collecting contributions through a nonprofit with their own unique identifying code, if you will, so that you can give a homeless person, you know, a contribution and not necessarily have cash. And know that you can write it off. And so I think that's awesome, because, like, as you were saying earlier,
that's amazing. Are you kidding me? That's gonna be incredible.
Yeah, so it's very simple, right? It's very simple. You can donate money and it goes through a nonprofit. And this friend of mine, actually, I had lunch with him a few times. Well, I have lunch with him quite a bit, it's a friend. But the last couple of times we talked about it, and most people don't know that if the person is not mentally ill, it costs only $3,700 to get them off the street permanently. And it's not that much money if you think about it. Like, you know, if you could crowd fund this money and give it to the nonprofit that is a specialist into solving those type of issues, then, you know, when you make a donation, one is tax deductible, and two, you're helping somebody to get off the street permanently. I mean, that's just some of the ideas.
One of my best friends from growing up had a rough episode with his family after his parents got divorced and was for a period homeless. Today, he's one of the top Supreme Court litigators and a law firm partner. You know,
yeah,
just that little
that happens.
To just make it from one rough spot to the next, you know, can make a world of a difference. And there were some good interventions that happened in his life that enabled him to get on the track that he got onto. Yeah, it's pretty proactive. But I think that's awesome what you're doing. And like you said, when you told me the story, like, we do participate in gentrification. And so it's great to also do some things to contribute to displaced population.
We're going to link to that in the recap email too.
Pardon?
I'm going to send a link to that site in the recap email as well.
Oh,
yeah, it just barely started, so it's not on. I mean, we released it, but it's not. I mean, you guys cannot donate. It needs to be through a nonprofit anyway. But if you want to read the page, yeah, it'll be fully finished in the next couple of days. Like, we are just wrapping it up. Cool. We put it out there, but the link is going to be the same.
Donatio,
if you want to check it out.
Donatio.app.
Yeah.
So it's the Latin word for donate. Donatio.
For donation, yeah. For donation in Latin.app. Donatio.app, yeah. So yeah, I mean, it's you know, because, you know, I mean, I feel grateful to be in real estate, providing housing for all kinds of people. That, you know, I mean, those you know, those people, they have quite a bit of money. The people that buy our condos, right? I mean, I see some financials. I mean, some guy shows up with like $5 million in his account, like sitting in cash, because he has nothing better to do with it, and he goes and buys a $500,000 condo for his kid. And there's a guy, you know, I know in some other part of town that's like living under a bridge, or when you drive on K Street or whatever, you can see that stuff. K Street Northeast.
Yeah.
So it makes you think, like, you know, oh, daddy bought this guy's a condo. Well, that's very nice, but you know, what about those people? So can I do something about it? You know, that's you know, that's the problem solver part, right? Can I do something about it? So, well, you know, I was thinking about this, and we can facilitate donations, especially now with COVID, for example. There's people don't get close to homeless people. They're very a part of the population that is very touched by COVID. A huge percentage of the population of the homeless population got COVID. So it's kind of like, you know, people get even afraid to go and donate a couple of cents. You know, I'm not even talking about a full dollar.
Plus, I can see almost how, like, it legitimizes the request, you know,
Right, exactly.
in the mind of the potential donor.
Right.
Just the other day, as I told you, when you told me that story about Donatio .app, I had literally been having drinks a couple nights earlier with some friends, and we got into a debate. One like, like, I want to buy the homeless person a hamburger so I know that they're not using it on drugs. I need to know how homeless are they, because they had really nice sneakers, and they get into this whole judgy thing. And then other people will in the same evening when we're drinking, we're saying, look, if you're going to come up to me and ask me for money, and you need money badly enough that you're willing to ask me for it, I'm going to give it to you. And then there's
Dude, introduce me those people.
exactly. And then there's people who believe anything in between those two extremes, but certainly for the people who are a little bit more more doubtful, it's going to, I think, legitimize the request, which will be, and then like you also said, didn't you indicate it'll probably lead to people making larger donations?
Yes,
You're gonna probably go into the system. Are you going to do 25 cents? Let's do $25,
Yeah, I get personally very rarely I have cash, for example. So I have like coins that are laying around my car for like putting hair in my tires or whatever. So I'll give some coins, but some guys, they came up to me and they're like, hey man, can you buy me a sandwich? And I'm by a restaurant. I mean, I went in, I spent like $10, $15, whatever, bought him a sandwich, bought him a drink, bought him whatever he wanted, and that's not going to break the bank for me paying like, $20, $10 to $20, whatever the cost was for a sandwich and a drink and maybe a dessert, whatever the hell the guy wanted. And sometimes they stock up on a couple of extra things to have it for later. Sure. And I'm like, it's not going to make a difference. I mean, I don't even care about the tax break, but I know some people are very sensitive about those things. Yep. So try to help out. And I know that I donate more money when it's when I pay with a card and I know where the money is going. That's that was kind of like what inspired this whole thing. And
I don't know if anybody on this call knows Adams Morgan, the neighborhood back in the day, but there was a man who used to stand on the corner of 18th and Belmont, right by the Belmont kitchen. Mm-hmm. And he was dressed in a very interesting manner, and he would compliment you in exchange for a donation. Ah. He actually provided a service, which was to compliment, and we called him the compliment man. And he did quite. I mean, it appeared that he did well, considering the job he was doing. So
yeah. By the way, they make about $25 a day, begging all day. That's the average. Yeah. That's kind of crazy. So anyway.
All right, guys, this has been a nice way to end it. Hearing about Bruno's not unrelated activities. They do relate to his real estate work. And we're hoping that you guys can try to make it next month. And we've gone way over. So thank you for staying.
Thank you. Thank you for having me, guys. Thank you for everything. Thank you.
Right.
Thank you.
Thank you. Have a good night. Bye-bye.